Perfect. So my name is Warren. I'll be taking you through the VAT modernization update. So SARS is embarking on a significant VAT modernization program that will fundamentally change how VAT is administered and reported in South Africa. At its core, this initiative is about moving away from a periodic, after-the-fact reporting towards a more digital, real-time view of transactions. Enabled by e-invoicing and continuous data exchange, the implementation date is set for 2028, with the phased implementation, testing, and pilots during the 2026 and 2027 years. So what does this mean practically? Currently, summarized VAT totals are reported to SARS through the VAT 201 process on a monthly or bi-monthly period, outlining whether VAT is payable or refundable to SARS. SARS then assesses the submission and may request detailed information to be submitted to support these totals. This delays the conclusion and settlement of refunds where applicable. In the modernized approach, all invoices, both issued and received, will be transmitted in real time to SARS through an automated process, allowing SARS to see VAT activity as it happens, eliminating the need for monthly submissions. So why the change? VAT remains one of the country's largest sources of revenue, and SARS is under increased pressure to close the tax gap, reduce fraud, and improve compliance, not by raising the rates, but by improving visibility and control. So how will SARS implement real-time digital compliance? Businesses will be required to generate electronic invoices in a structured XML format directly from their ERP systems. These invoices will then be transmitted in real time through a secure, standardized digital exchange network from business to business, as well as to SARS, facilitated by either middleware or a third-party e-invoicing and compliance software, ensuring continuous transaction control, clearance, and reporting. The benefit here is that instead of every company building a separate integration from every customer or every supplier, they connect once to the people-style network through a certified access point. And from there, they can send or receive invoices with any other participant within that same network. So what does this mean for your business? Well, VAT compliance shifts from a monthly reporting to being embedded at the transactional level, meaning that errors can no longer be corrected at month end and just before submission. Emphasis is then placed on your master file data and system configuration, where poor setup will impact your reporting accuracy. Spreadsheets and manual workarounds become visible and lead to compliance risks. Your finance and your IT teams will become ever more connected, and your operational weaknesses are exposed immediately. Now that you understand the shift that is on the horizon from a VAT perspective, you should also realize that at the center of being compliant rests your ERP system. Fortunately, JD Edwards already contains majority of your transactional data, your tax logic, and your audit controls required. It has robust VAT calculations across accounts receivable and accounts payable. It has multi-jurisdiction tax configurations within tax areas. It has a full audit trail via the general ledger and other modules. And invoice data is structured and normalized across tables. It has orchestrator capabilities, allowing for automating processes and trigger events. Unfortunately, there are gaps, meaning that JD Edwards is not an e-invoicing platform. So whilst it has all the necessary information and can expose your data in the correct format, a third-party e-invoicing platform or middleware compliance platform will still be required, as for any other ERP system. And then batch processing is the current status quo. You would need to shift to real-time processing, again facilitated through orchestrations. So what should you do to prepare your organization for the VAT modernization? Your immediate priorities should be assessing and cleaning your master file and address book data, invest in orchestrator capabilities, as this plays a pivotal role in real-time transmission, review all of your processes to identify all of your manual steps, your workarounds, and your spreadsheet dependencies within your finance function. These areas will be critical to transfer into your ERP system. And align your finance, tax, and compliance teams. Within the next 12 to 18 months, one should evaluate SARS-approved e-invoicing and compliance service providers, and integrate into ERP with orchestrations. You should develop real-time reporting and trigger events with orchestrations and map out your workflows. Update your data governance frameworks. Implement continuous compliance monitoring, i.e. automated reconciliations, and develop a change management framework for training users on the new process. So now that we've talked about the what, the why, and the how, let's talk about why specifically and what would happen if you don't act now. First and most obviously, there's a compliance exposure. SARS requirements are evolving and non-compliance carries real consequences, such as penalties, increased audit scrutiny, and reputational damage. The longer you wait, the more risks compound. Then there's the cost factor. Organizations that delay end up in reactive mode, rushing implementations under pressure. Those last-minute projects always cost significantly more than the planned initiatives, and they carry a much higher risk of failure because there simply isn't enough time to do it properly. Thirdly, think about your current manual processes, the spreadsheets, the workarounds, and the offline reconciliations. Those cannot scale to meet real-time reporting demands. When SARS expects continuous transactional data, a process that relies on someone pulling figures into a spreadsheet at month end simply won't work. You'll hit operational bottlenecks. And underpinning all of this is data quality. If your master data has issues today, such as incorrect tax codes, incomplete vendor VAT numbers, inconsistent address book records, those problems don't get better with time, they get worse. The longer you leave them, the harder and more expensive they become to fix. Finally, there's that competitive angle. Organizations that move early on this will be better positioned. They'll have cleaner operations, stronger controls, and greater confidence from trading partners. If your competitors are sending compliant e-invoices and you're not, that creates friction in the supply chain that works against you. The closing message on this slide really sums it up. The question is not whether VAT modernization will happen, because it will. The question is whether your organization will be ready for when it does. And based on everything we've discussed today, the time is to start preparing now. It's clear that the VAT modernization is no longer just a tax initiative. It represents a broader finance and digital transformation program that requires strategic planning, strong governance, and the right technology foundation. As a trusted JDE advisor, Resolve Red is well positioned to support your organizations through this journey with a structured and practical VAT readiness approach. Our support begins with a comprehensive current state assessment across both your business and your technical areas. This includes a detailed review of finance and tax configuration, covering VAT codes, tax rate setup, accounts receivable, accounts payable tax logic, foreign VAT handling, intercompany VAT processing, and related controls. We also assess the wider JDE technical landscape, including integrations, middleware, orchestrations, reporting frameworks, and any other external spreadsheets or manual process dependencies that may introduce compliance risk or operational inefficiencies. From there, we perform a gap analysis against the emerging SARS VAT modernization requirements and develop a clear roadmap toward compliance and operational readiness. A key focus area is master data remediation and enabling the necessary JDE configuration and development enhancements required for a modern digital tax environment. This includes strengthening data quality, improving your tax-related master data, and reducing reliance on offline or spreadsheet-driven processes. On the technical side, we support orchestration integrations, API enablement, middleware connectivity, structured XML generation, VAT reconciliation capabilities, and workflow automations. Importantly, we also help organizations evolve from a traditional batch-based processing towards more event-driven, real-time processing models, positioning JD Edwards environments for future digital reporting and e-invoicing requirements. Ultimately, our objective is not only to help clients achieve SARS compliance, but to use this initiative as an opportunity to create modern finance operations, improve control, and create a more scalable and digital-enabled ERP environment. And as such, we'll be scheduling time to discuss with you in more detail in our SLA meetings. However, feel free to reach out to us. The key takeaways, which I think are quite important for everyone to remember, is that VAT is going digital. SARS is moving from the periodic reporting to real-time e-invoicing and continuous monitoring. No ERP system can do it alone, and a third-party compliance platform is essential. JD Edwards has the strong foundations. It's got robust tax calculations, audit trails, and orchestration capabilities. Let's just get started. You should start preparing now with data cleanup, orchestrator skills, and process reviews. And remember that this is bigger than that. Use this as a catalyst to modernize your finance operations, strengthen your controls, and build a scalable digital ERP environment. We're at Resolve Red, again, your trusted JD advisor, and we're ready to guide you through this process. Thank you.